From the NASDAQ market site in Times Square, we now shift gears to international markets. Across the board, most markets in Europe and Asia facing losses at this hour. And for more on the global trading day, as well as some catalyst stocks, we turn to Laura Board in the Deals London newsroom. She's got the latest. Laura?
Thanks, John. Over here in London, we've just heard that the Bank of England has kept rates unchanged as expected. The European Central Bank, whose situation is looking a little bit more exciting, possibly after last month's surprise cut, is meeting right now to discuss rates and will make some commentary later today. On the corporate side of things, Merck, that's the German Merck, not the US Merck, has announced a large 2.6 billion purchase of a specialty chemicals maker, AZ Electronic Materials. It's listed in London, based in Luxembourg. It's important to note that this isn't a humdrum commodity chemicals maker, but in fact a company which makes substances used for flat panels and for microchips, so very much in vogue and very much a growth area. The shares in both companies are up right now. In a sunnier part of the world, over in Sydney, we've had bad news from the national airline Qantas. It said it may make a loss in the first half of the year of as much as $270 million. It's laying off 1,000 people and says that the full year looks volatile. It's pinning its problems, as well as the old story of high fuel prices, on unfair competition. And specifically, it's aggrieved that the number 2 in the Australian airline sector, Virgin Australia, is receiving implicit state backing by Singapore, New Zealand and Abu Dhabi. Qantas, however, has a restriction on its ownership, meaning that 51% of the company has to be Australia-owned. It's lobbying the government hard for a lifting of that limitation and hopes to say more in due course. In the meantime, its stock fell more than 11% in Sydney today. Back to you, John.
Thank you very much, Laura. That was Laura Board with the Deals newsroom in London.